Welcome to ETF Junction channel. We all as a human being are inherently very innovative. And this is specifically seen in investments. A very basic understanding of passive itself has evolved so much that people are trying to take this to a next level. Passive generally means you invest in an index, and people have put their mind how can they combine the attributes of passive as well as active to create a better return out of passive investing, something called smart beta fund. And as the name suggests, smart is basically smarting the index investing to deliver better return. If you look at beta, basically it stands for something which is in sync with the returns of the market. A higher beta talks about higher volatility of the particular portfolio, but eventually delivers better return. Coming back to the discussion of today's topic, which is smart beta ETF. And if, as the name suggests, smart beta ETF basically is defined where investing happens based on a rule-based approach of selection of particular asset or an instrument in a portfolio. Now this is slightly different than index investing. Index, basically you don't have to do anything. You just have to copy the construct of the index, whereas here you basically try to take different or even beyond different instruments to aid or enhance your return. Smart beta fund basically chooses different themes. It could be dividend, it could be value, it could be total return. So there are different themes or different factors which is taken into account to create a smart beta. So that's one. As we progress, we are seeing a good growth in this segment, which is almost giving a complete fight to the active investing. And eventually, this is a new passive investing which has started created. One of the prominent name globally, which we all of us are aware of, is ARK. They basically excel in selections of future technology stocks, and they've been able to deliver extremely good return over last couple of years. So that is very straight example of how smart beta funds are worked out. As I stated, the prominent smart beta fund globally claimed, known, and also been having a very good customer base is ARK Investment, helmed by Cathie Woods. She's been able to demonstrate and create a new category globally as far as smart beta investing is concerned. Now when we look at, there are different strategies in smart beta investing. It could be equal weightage, where the entire stocks are given equal weight. None of them is higher or lower in allocation. The second would be based on the value. Third is based on the volatility. There are certain stocks which are very volatile. There are certain stocks which are very less volatile and more stable. Third is momentum. So these are a couple of strategies which are adopted to create a smart beta funds or smart beta ETFs. Now we'll talk about the advantage of smart beta ETF. First, it seeks to enhance the return by reducing volatility. Second, you can have the choices of different strategies to enhance and align your portfolios to get better return. Third, it basically competes with the active funds, and it is much cheaper vis-a-vis the active funds expenses, though slightly higher than the similar passive funds. So it gives you an advantage of cost as well. Now we'll talk about the disadvantages which it carries. If you look at, this is slightly new concept, and as a result the volumes are lesser, so you might face issue as far as buying and selling goes. Trading could be illiquid. Second, since we have to pick up stocks in the particular ETF beyond indexes, and that could be little higher on the cost side. So these are the two shortcomings which we can see in smart beta ETF. Thanks for watching the video. Hope you enjoyed it. Please like, share and subscribe ETF Junction channel.